This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. I have Intel also, lots of semis rolled over last week. Very strong kind of like profit taking, but not a break in trend. Repeat, not a break in trend, especially as we're facing NVIDIA and all the expectations around it. Markets right now are flat as a pancake, but let me go over SPY and Q and that kind of stuff for your week ahead because it's important. Do you see where we closed last week at 708.93 and prior week 711? So this was the grind, right? They're starting to sell underneath the surface. Breadth is starting to break down. And I said that this doji is either followed by a very excited bar. It's called a doji sandwich, or we're going to move into potential for an evening star reversal where it has to get back below, let's call it 709, and stay there. So then your price target for QQQ, sorry, I'm talking 709 QQQ. This is where we close the last 2 weeks. We stay above, it's bullish. It's very extended though, right? We get below, it's bearish. It has to stick that landing. And then of course, NVIDIA has to sell off after earnings in order for that to really work because of the concentration risk in NVIDIA. So that's it. It has to come on down below 709. That's it. That's it. That's all there is to say about that. Otherwise, we have no sell-off. Okay, SPY, same. You can see I did this. Where did we close? We closed at 739. I'm going to fix that, but I actually tagged it to the top of the prior week. This is week of first week of May, second week of May. We closed at literally just below 737, and last week just 739. I am going to say I want the 730. What is this? 738. I want 738 to break. 738 to break, and then you have more potential for a pull down. Right now it's fighting it a little bit. We're literally not very weak, but that's what you got to break. And SPX is the same idea. Got to be inside 7,400. So those are your levels for those who are wanting to short into a reversion to the mean type trade, which for SPX is very clearly 72, 73.26. You can see it on the hourly. Got a little shake and bake here beautifully. And we've already played this once. Then it moved higher as breadth was breaking down and selling underneath the surface. It moved right back down, gorgeous, 74.02. Now it's got to break 74.02 to make it back down to 73.41 on the intraday. I'm on the hourly for SPX. You can see it for SPY on the daily. We've already closed below the 3-day. That hasn't happened for a while. So now we have to close below the 8-day EMA. Otherwise, just keep it below 7,400. Dealers are still in the habit of buying the dips and selling the rips. So that's why come up with some structures that can give you some downside exposure, but you're not going to be hurt so much if wrong, which is one of the reasons why I suggested selling the at the money put and buying 2 out of the money puts. Depends on your time frame of how you want to defend, but I like them a little bit further out, gives a little bit more flexibility because, like I just said, if this stuff decides to shoot higher, it's going higher. We're still in a very positive earnings, enhanced, taco enhanced market, all-time high vibe. So just kind of keep that in mind. What we do have is IGV pushing back up, and that's the rotation that I have been sizing up, which is basically hardware goes into software, and it is absolutely working. TRI is Thomson Reuters, and that is a poster child. So keep it below this close, and you've got that potential for an evening star reversal and a reversion to the mean of basically 509. This is potential. Keep it below 566, 7, 8 area, and you can see some fade down to 509. Right now it is trying to do 0.08 for SMH red. IGV is only 0.3% red. Looks very much like it wants to go to green. And then you have a bunch of, IGV plays that are popping. Now in particular is one that I have been tracking. So gorgeous bullish engulfing with a gap up. That was last week for now, service now with a gap up. Literally opened at 98.5 and it just needed to clear 99 and it's above. So keep it above 99 and it's getting chased. So now is definitely getting chased. All right, semis have picked up a little bit more speed, not a lot, but remember when we started the morning, they were only down 0.7%, and now they have doubled. They're down 1.5%. So for the chasers out there, you can see semis right here. You got a little bit of green. I'm in SMH right now, but you can see a lot of green down here. So let's sort by that. And you can see some pullback, breadth breakdown, semi selling, nothing major, but these already got way extended. Some of them haven't even broken their 8-day EMA yet. But we do have some pullback in memory plays and hardware plays, WDC. You can see also evening star reversal potential. Let me size that up for you. So keep it below 480. I'm wrong if it's above 480. Full stop. So that's how this works. It has done nothing wrong on a trend basis. Pullback was shallow, breakout, held, 10-week has not busted. Huge expansion higher over the past 6 weeks. 1, 2, 3, 4, 5, and on 6th week, it rusted. Now it's coming back inside 480. I'm talking about WDC, and it's called profit taking. Simple. Ahead of the Samsung strikes, ahead of NVDA earnings, whatever you want to say. Look at STX, same. Coming into 728, it breaks 728, it moves down into the 600 area. STX is also another one. Broke out, pulled back for a few weeks, got defended, gapped above 429, huge run into the hot sun, doji last week, and now it's selling, profit taking, down 6%, groovy. It's got lower levels to come in and digest, with the notable one being 592.84 specifically on the daily, which is a gap fill target. That's it. We gotta wait. It gapped here, and now it just filled that gap. Nope, that was not, repeat, was not a gap fill. That is. Look at that. High is 728 perfectly, and the open and the low is 729. That's a gap fill. 728 is a gap fill for STX. That's where it's going to fill. So if you are holding, right now you're 748 for STX, you want to fill 728, maybe even overshoot to 700, because that's like a nice little psychological level for options where they're probably protecting pretty aggressively. But anyway, point is you got 728 as a gap fill. Now what happens at 728? You get inside, you've got 608. Beautiful. And I'm wrong totally and completely if it gets back above 802. So if STX gets back above 802, it's going to run higher. Otherwise, right now you got profit taking into 728. 728 breaks, whether it's this week or next week, you head down to 608. So you got Western Digital, profit taking. STX, profit taking, levels given. Micron, profit taking, sitting on the 8 EMA, but not looking very excited about it. And there's your level, perfect level. Right here. That was the close 2 weeks ago. And last week for Micron, it closed a little below it. So that's where you need to stay. And then it hit a high. It literally it hit its head right here. So that's where you need to stay below. Long story short, 747. Keep it below. Above is bullish, below is not. Oh yeah, SanDisk. SanDisk is a little bit trickier, but let's go over here. Left shoulder, head, right shoulder, it needs to give up, and it's having a really hard time giving up 1341. That is a fact. It is not giving up. Even if it's down 5.5% today, it has not broken this intraday support. It is definitely below the 3 and the 8-day EMA, and it definitely has a date with 1189 as a gap fill target from 1331 right now. So we're 10 points below, but not enough to like kick it. So right now, that's the goal. SanDisk SNDK down to 1189. And to do that, you really need to make sure that 1341 continues to break down. And then you will see 1189. So there's your SanDisk and your Micron profit taking in the house, and your STX and your Western Digital. They're not falling apart. And the market's not falling apart. Anyway, green. Look at the weeks in a row. So this is under the surface. Software is getting accumulated, and the 10 and 21 haven't crossed over yet. Just like the TRI is just way early innings, but it's holding 82.5. You get the idea. So software is definitely taking the money. that is flowing out of semis. That's it in a nutshell. So definitely we've got software into hardware as a theme. We've got no big drama in the space, just to keep SMH below that 567.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.